Good morning. Welcome to Market Monday for November 18th, 2024. Last week's CPI inflation data came in about as expected at 2.6%. Looking under the hood, if you remove shelter, inflation was only 1.3%.
We've talked about shelter quite a bit over the past few years. Remember, it's about a third of the total inflation reading. Here are the official shelter inflation readings. And here's the more real-time shelter inflation gauge, the apartment list index here. Remember how official CPI shelter data was really slow to reflect the reality of sharply rising rents, then peaking around 8% as real-time rents were actually experiencing deflation? We can see here those official figures are still around 5%. Perhaps artificially inflating, pun intended, the headline CPI figure Chad was just talking about.
All right, we promise only one presidential theme chart for today. You're not actually disappointed, are you? Well, first let's start here. Okay, sure, we see a lot more green than red, but look at some of these numbers. Folks, these are not small returns. 20, 30, 40, 50, 60, 70, 80% returns. Enough already, Matt. Tell us what we're looking at.
Let's put some dates to it. And we see here we're looking at S&P 500 stock market returns under each president since their inauguration day, which are these dates over here. We see so far stocks are up 55% under President Biden. Not quite as strong as Trump's first term, but look at Obama, George W. Bush, and look at Clinton. My goodness.
So point number one, the stock market generally goes up under each president. So is your investing horizon at least 4 years? Might be a candidate for stock market investing. Of course, with a caveat that you could run into an 8-year period where you'd still be down. And point two, a lot of these returns are circumstantial, much bigger than the president. Here we had dot-com bubble and China really coming into the world stage. Here we had dot-com bubble pop, 9/11, then global financial crisis. Obama essentially started at the bottom of the global financial crisis and rode that recovery up, et cetera, et cetera. So what will Trump's second term bring?
While we don't pretend to know what will happen over the next 4 years, we do know that over time, what do we say is the mother's milk of the stock market? Earnings. That's what we're buying when we buy stocks. Would it make sense then that if earnings double approximately every 8 to 9 years, the stock market should also double? Here are earnings here, of course, and the stock market here. Over time, in one way or another, the stock market will follow earnings. But sometimes these things get a bit off track, no?
And there are certainly periods when the stock market grows more or less than earnings. Remember, over time, the stock market follows earnings. But on shorter time frames, stock valuations, multiples, as we've talked about this before, also directly influence stock market prices. And we can see here that over the last 12 months, sure, earnings contributed some to that increase in the stock market. But the majority of the gain came from an increase in the multiple, or the stock market just becoming more expensive. Investors paying more for the earnings. Similar story for global stocks. And just a periodic, gentle reminder that last time when stock markets outpaced earnings for the extended time, there was a pretty rough resetting of stock prices, even without a recession.
And today we'll leave you with, did you hear the Pennsylvania House of Representatives introduced a bill to create a strategic Bitcoin reserve? Paying attention yet? Have a great week.